We are at halfway through the year of 2021, and we are going to be discussing a lot of things. So we're going to talk about the predictions of what the rest of 2021 is going to look like. We're going to talk about the things that you need to be aware of. We're also going to talk about what interest rates are doing and how that can affect the market right now. We're going to talk about what the market's currently doing, and also we're going to forecast what we feel the rest of 2021 is going to look like going into 2022. So stay tuned. Hi, my name is Brandie Mathison-Klein with the Mathison-Klein Group at Keller Williams Realty. Be sure to check out our website at brandiesells.com, and also be sure to subscribe to our channel. We put out great content every week that gives you all the information of what's going on in today's current real estate market. So what is going on right now in the market? Well, the things that we need to be aware of right now is what's taking place with the forbearance situation. Currently, we know that over 2.5 million Americans are currently in some form of mortgage forbearance. Now, what is that going to mean for us? Well, currently right now, the CFPB is putting some protective measures into place for those folks that have filed for mortgage forbearance. What they're trying to do is they're trying to put into place a temporary COVID-19 emergency pre-foreclosure review period that would block any foreclosures from happening until at least the end of 2021. So what that is going to do is it's going to help a lot of people that are in some type of forbearance. It's going to help them to stay in their homes longer and avoid their home from going into foreclosure. Now, what are going to be some of the options that people that are in forbearance have? Well, the good thing is that we are in a completely different market than where we were our last market crash. And so market values have continued to increase quite significantly. So if somebody's been in forbearance and they find that when the forbearance is over and they can no longer, for whatever reason, afford their payments, then they have the option of going ahead and selling their home. The other thing is that mortgage companies are going to be a lot more flexible in working with the homeowner by giving them a lot of different options. In some cases, they might be extending or renegotiating their loan term out to even 40 years. So there's a lot of different options that are going to be at play for those folks that have been in forbearance that would allow them the opportunity to stay in the house so we don't have a huge flow of foreclosures coming onto the market. The other thing that we're seeing right now is inflation is, I'm going to be honest with you, I'm a little bit concerned to see how much inflation is going up right now. It's been the fastest that we've seen now in over 12 years. So we know some things are very obvious that they've increased. Energy prices have currently gone up over 25% year over year. Gas is up almost 50% from this time last year. So everybody that's, obviously we're getting out and about more. And so gas prices have gone up almost 50%. If you're looking to buy a new car or a used car prices are up over 21%. And let me tell you about lumber. Well, lumber has gone up over 124% since this time last year. So this is really about supply and demand. So, when all of these products either took a break from being produced or a very slow rate of production was taking place, then now that the demand has increased significantly, there's not enough product to be able to deliver. And so therefore, the prices of these products are continuing to go up. And it's the same thing with the housing. So we're going to see it in new construction, and we're also seeing it in resale. Some of the things that we're noticing is that even with new construction, the prices that they were locked in at have actually started to increase a little bit because the cost of materials have increased so much. Okay, so what's going on with the interest rates right now, and how is that affecting our housing market? Well, thankfully, the interest rates have continued to stay low, and that may also be contributing to our lack of inventory, right? So interest rates are hovering over the low low 3% range right now. And what they are anticipating is that the interest rates are going to go up. By the end of 2021, they're expecting them to go up to about 3.7, maybe even the low fours. And so what that's going to do is it's going to make housing, like your monthly payment, if you're getting financing, to be a little bit more expensive. So that's one thing to definitely keep in mind. When we take a look at what's taking place in the market right now, in today's market, inventory is lower than we've ever seen. And we literally are looking at less than a month's supply of inventory. So we're really looking at about 3 weeks supply of inventory. And that is actually pretty scary. The good thing is that there's been a lot more home sales that have been taking place year over year. So more home sales are taking place. I will say, if you compare it in April to March, there was just slightly less home sales that took place, but there's still more home sales that are taking place year over year in the large scheme of things. Currently, right now, our average sale to list price is 100%. In fact, we're seeing a lot of homes that are selling well above the asking price, and buyers that are making up the difference of any appraisal deficits that are taking place, which that then increases the values in that particular community. That becomes a new comparable sale, which leads me to our average home sales price, which is currently right now over $326,000. That is a 21.4% increase year over year. So that is pretty incredible when you really think about that. So what are we predicting to happen in the rest of 2021? Well, there's some things that we have to take into consideration, right? So we know that there is a major housing shortage. What's causing that housing shortage is a couple of different things. One, interest rates being so low, so people wanting to take advantage of the housing market while the interest rates are low. That's one factor. Another thing is that back when the housing market crashed several years ago, back in 2007, 2008 timeframe, the new home construction pretty much came to a complete halt. And so you can see here that back in 2016, when the market first started to really start to recover, there was only about 562 homes that sold, and there was about a 5-month supply of inventory. Now, you fast forward down to March of 2021, which is as far as the stats go, and you can see that the housing new homes sales have pretty much doubled. And you can see that the month supply of inventory has decreased down to that 3.6 month supply of inventory. The thing is, though, is that we've not been able to really make up the gap for the lack of new homes that were built during the market crash and recovery period. So we have a lot of families that have need for homes. We've got a lot of millennials that are getting out there and they're ready to purchase a home. And so there's a lot more demand, but there's not as many homes that are available because we had such a decrease in building when that was taking place. Now, new home construction is also struggling in that sense because they're still low on workers that are available to work, and they're also low on that inventory because of the inflation and the supply and the demand aspect of things, because lumber was not made or distributed as much during the height of the pandemic. And so now it's causing a trickle effect, and we're starting to feel all of those effects. So we are not anticipating that the housing supply or that the market is going to change much throughout the rest of 2021. I do anticipate that when the interest rates start to increase a little bit, that the demand will start to taper down. And I also will anticipate that our prices are going to start tapering down. They're not going to be increasing and jumping in 5 to 6% increments every single month like we're seeing right now. So it's going to start to steady, but we're still going to see a more gradual increase in the market values. So where does that leave you if you are still looking to buy a home? So if you have been on the fence about buying or selling, or just buying or just selling, I really want you to really kind of think about this, right? So if, for example, right now interest rates are still low and we've got prices that are continuing to increase, It might feel like, oh, I don't want to be in competition with all of these other buyers. I don't want to sell my home without having another home to go into. And it just feels a little bit stressful. However, at the end of the day, if you are getting financing, it may behoove you to go ahead and jump into the market right now and go ahead and see what you can find within the interest rate and the price parameters that are comfortable for you. If you look here at the graph, these are some affordability scenarios. And if you look at, let's say, March of 2021, if there was a home sale, the value is at 334,500, and your mortgage rate was at 3.1%, then your monthly mortgage payment would be right at 1147 a month. Now, let's say that that same house was on the market, the price value didn't go up at all, but the interest rate went up to 3.5%, then your payment would then go up to over $1,200 a month. Now, let's just say that interest rates stayed the same, but market values continued to increase ever so slightly, and that same home then went up to 350,000, and you were still able to get in, locked in at a 3.1% interest rate. Then your payment would go up just under $1,200 a month. But let's say that that same house, the price point continued to go up. You're now at 3.5 or 350,000, and you're at a 3.5% interest rate. Your payment is now $1,257 a month, and all of that is just for waiting. So if you take that and you times it out over a 30-year period of time, that adds up to quite a bit of money just for the thought of waiting. So I'm not saying that right now is the right time to buy for everybody, but I am saying that it is very prudent for you to go ahead and take a look at the circumstances, take a look at what you're paying now. If you have a home right now, how much equity do you have in it? All of those different factors to take into consideration. A lot of people are like, well, I'm just going to wait because I know that this can't sustain itself. The bubble's going to pop at some point. And, that may be the case. And what we're seeing with all of the different factors that we're putting into play is that we're not going to be seeing a slowdown anytime soon. So I hope that this information is helpful for you. If you found this video helpful, be sure to check out If Now is a Good Time to Buy. It goes a little bit more in depth on that. And be sure to subscribe to our channel and stay tuned.